Good morning, Sunday morning, 9:23 a.m. The date is 11/8 of 2015, and we're looking at the weekly chart on the Dow Jones Industrial Average. When we were putting the highs in the Dow, we had a few Black Mondays. We had a capitulation on the major high that was here was 18,131. And then we came right back and we put a high here of 18,137. And we clearly said the following, and here is what you need to do. Basically, the Dow had lost 2,000 points in 1 week. One of the things that we're bringing up is the Dow Jones. When we called for the big Black Monday on the Dow, here are the results. Here are the Black Monday 1,000 points live crash. It started with the opening bell. That capitulation was bigger in market hours than the May 6th of 2010 capitulation that we had called for. And we can clearly see that the capitulation and the amount of selling that was in the Dow is the first beginning part of a big market turn going to come. We're in the Thanksgiving rally right now. It's late. The Christmas rally, we've already put a 6-week bottom right there. The low was 15,370. This was the fact that in 1 week, starting right here during that week on 8/16, we were in the beginning phases of a huge downside move that we had called for. And basically, in a 5-day period, the Dow Jones lost 2,000 points. That is the beginning of a forward-looking bear market that will happen in various time frames as we go into 2016. Now, like I said, if you want to learn more for people around the world, is we're hitting this major resistance. The Dow has yet to break to new highs. It has not broke to new highs. It very well could be. One of the things that we're going to be looking at, though, is the Dow could easily do that because of the amount of short sellers that have come into the market. What I am going to say here and now, we had 6 weeks down, 6-week consolidation, 6-week breakout to resistance. We still have a monthly sell symbol. But I am going to tell you one thing. The volatility that we called for, and we did, the true story is here. We called for that volatility. And not only that was how the bear funds were going to pay you on the Dow as the Dow dropped from 18,137 to the very lows of this wick right here. So let's do the following. Let's take 15,370. One of the things that we're talking about, when the Dow was up here at 18,350, that was a major super top at resistance. And we had pullbacks in here. And then we had consolidations. And then we had pullbacks. We tested some of the key weekly moving averages then, as we did. And I will just zoom this up right here so that people can see 18,351. And then on this weekly overbought market, the capitulation on the Dow was going to come. We called it capitulation, people. And so we had major resistances. This is a 4-week resistance. We went down, we tested the 50-week moving average, the white line. We popped back to resistance, but guess what happened? Guess what happened? I'm going to show you what happened. We lost 2,981 points on the Dow from its original high. one of the things that we are telling everyone is that the downside is much greater in value than the upside as it is. We're going to take another snapshot here of this rally. I'm going to blow up just the rally off of the bottoms once again. This is what it looks like. We've gone through resistance levels. Turkey rally. Well, there isn't going to be much of a Thanksgiving turkey rally. And if we do come up to the Dow and hit that next key trend line right here at resistance, guess what? It's not going to be about a Christmas rally unless they can get super exuberant. What I'm saying is right now is the markets had gone from oversold. They were oversold down here. And now we're talking about they're overbought. And they are. The Dow has entered the overbought territory. And basically, I will leave it at this right here. And this is that trend line that goes back over here. This is an upper trend line that we could hit. And I'll show you one more. Show you one more. It's going to be this area right here. That's slightly above 18,000 on the Dow on a weekly with a weekly sell signal on the Dow. So basically, as we're telling everyone around the world, is that the counter rally, which is called the bear starts with moves like this. You can tell when a new bear market is going to be coming. I didn't say it's coming tomorrow, but I am saying, just like I've always said, it is coming. And in order to say that you're going to have a bear move, you've got to go through increased volatility. Always the volatility gets higher on both sides. You consolidate, you break out, you hit resistances. This is how bear markets start. And they are. And as we move into January of 2016, pal, it's not about how that bull's going to be in control. No, no, no. You heard me say no. And therefore, we will keep updating. And these are the major wall of resistances on the Dow Jones. And we've had the counter rally. Counter rally is here. This is the counter rally, which would normally happen in a Christmas rally. If we were down here, like we said, we were going to go up. We were oversold, and the bull would come back in. The bull stepped into a counter rally versus the bear rally. This is the bear rally all the way down, and the consolidation, 6-week consolidation breakout with the gap open up and running back up here. This is the bull side of the rally. So basically understanding which is greater in value. We already know the value of almost 3,000 points that dropped on the Dow. But the upside move in the bull rally is a lot less greater in value. That means that the bear rally from where it started over here on these weekly charts are greater in value. Meaning that this Dow has to go all the way back up here and go through these major resistance lines. This is one, so we got this little pocket here, and that's the upper end of course, you know, 18,200 is going to be the key. Stay tuned. Learn how to interpretate a future bear market or future bear reversals in the key indexes. And not only that, your equities, they have come off of their level. We've been in the earnings season here that started. The earnings season has started, and we're starting to finally get down toward the lateral part of that earnings season. And I'm telling you that forward looking in calendar 2013 and 2013 is where the rally started. However, we called a super bubble. And if you go to stockmarketfunding.com or daily stock charts, you're going to find out what a super bubble is. And before January 2015, we said 2015 and 16 is in a major bubble. And we are. And the headlines, um, the GDP, the PMI, the ISM, all of your economic caters with Janet Yellen. Are they going to raise rates in December? And you know, we're going back through this again. We have major stimuluses going on around the world. All other central bankers in other countries are printing money just like the US did. That means that the next move lower will be greater in value than the 2,981 point drop, as it will. I'm going to conclude the Dow. I'm going to conclude the Dow weekly chart. I'm going to conclude that any of you people worldwide can get involved in our programs and understand how you too can take part in the volatility time cycle, volatility, seasonality, season volatility, seasonality volatility, and how to trade it and make money with it. Get on board.